Most traders believe the reason they lose money is because they don't have the perfect strategy. They spend months searching for better indicators, better signals, and better entry points. But the truth is much deeper than that. The real reason most traders fail has nothing to do with strategy. It has everything to do with how the human brain works. Your brain was designed thousands of years ago to help you survive in the wild, not to trade financial markets. And the instincts that once protected humans from danger are the same instincts that destroy trading accounts today. If you truly want to become profitable, you must first understand the psychological traps your brain creates. Because until you control your mind, the market will always control you. The survival brain problem. Human beings evolved in dangerous environments. Thousands of years ago, our ancestors faced predators, starvation, and life-threatening risks every day. To survive, the brain developed two powerful instincts. Avoid losses immediately. Seek rewards as quickly as possible. These instincts were perfect for survival. If early humans hesitated when facing danger, they died. If they ignored opportunities for food, they starved. But in trading, these same instincts work against you. Markets reward patience, discipline, and probability thinking. Your brain wants the exact opposite, and that is where the conflict begins. Fear, the silent account. Killer. Fear is one of the strongest emotions in trading. When a trade moves slightly against you, your brain instantly sees it as danger. Your heart rate increases. Your focus narrows. Your mind starts shouting one message: get out before the loss gets bigger. So what do most traders do? They close the trade early. They panic. They protect themselves from a small loss. But ironically, this behavior prevents them from ever achieving large gains. Professional traders understand something beginners struggle to accept. Losses are not failure. Losses are simply part of the business. Greed and the trap of FOMO. While fear causes traders to exit too early, greed causes them to enter too late. This happens when price suddenly moves quickly. You see a big green candle. The market is exploding upward, and your brain begins to panic again. But this time, for a different reason. It tells you, you are missing the opportunity. This trade could make you a lot of money. If you don't enter now, it will be too late. This is called FOMO, fear of missing out. So traders jump into the market without a plan, but by the time they enter, the smart money has already taken their profits, and price often reverses. Why the market exploits human emotion? The market is not random chaos. It is driven by human psychology. Millions of traders around the world are making decisions based on fear, greed, hope, and panic. Large institutions understand this very well. They know where retail traders place their stop losses. They know when traders chase breakouts. They know when emotions are at their highest. And markets often move in ways that trigger these emotions. That is why fake breakouts happen. That is why stop hunts occur. That is why liquidity grabs exist. The market constantly tests human psychology, the professional trader mindset. So what separates profitable traders from losing traders? It is not intelligence. It is not secret indicators. And it is not luck. The difference is mindset. Professional traders understand that trading is a probability game. No single trade matters. One loss does not matter. Even 10 losses do not matter if risk management is correct. Instead of thinking about the outcome of one trade, they think in series of hundreds of trades. Their focus is not on being right. Their focus is on executing their system consistently. Discipline, the real trading edge. Most traders look for an edge in charts, but the real edge is discipline. Having a strategy is easy. Following that strategy when emotions are high is extremely difficult. Discipline means taking trades only when your rules say so, accepting losses calmly, avoiding revenge trading, and staying patient during boring market conditions. This is what transforms average traders into professionals. Rewiring your trading mind. The good news is that your brain can be trained. Just like athletes train their bodies, traders must train their minds. You can build habits that override emotional reactions. Some of the most powerful habits include keeping a detailed trading journal, limiting risk on every trade, following a strict trading plan, and focusing on long-term consistency instead of short-term results. Over time, these habits rewire how your brain responds to the market. The truth about trading success. Most people enter trading believing it is a fast way to make money, but the reality is very different. Trading is a mental game. The charts are simple, indicators are simple, but controlling emotions is extremely difficult. That is why most traders fail, and that is why the few who master their psychology achieve extraordinary results. Final message. If you truly want to succeed in trading, stop searching for the perfect strategy. Instead, start working on the most powerful tool you have, your mind. Because the moment you learn to control fear, ignore greed, and think in probabilities, You stop reacting to the market, and you start trading like a professional.